Hi folks, this is Sean Hyman coming to you from lovely Los Cabos, Mexico, and I'll be teaching traders here how to trade currency crosses because they have so much more tradability in my opinion than just the majors. For those that like trends, they're more volatile, they're more trendy, more consistent. For those that like ranges or mild trends, there's crosses set aside for that as well that respond very well to that. So there's something in crosses for everybody. But I want to talk to you for those who just trade the majors and let you know why you should still watch the crosses when you're trading your majors. Majors being things like euro dollar, pound dollar, things of that sort. Crosses being things like pound yen, euro yen, etc. Crosses don't have the dollar in the pairing, in other words. This is a chart of euro pound 4-hour chart down here, and euro pound for a lot of the previous 40 days was headed upward in an uptrend here, broke down here, and then started a series of lower highs and lower lows, which is where we have this now. So what do we have here? Formerly the euro was stronger than the pound. Lately the euro has actually been weaker than the pound. So how does that help me in my trading of the majors by watching this cross? If I'm looking to get long one of these currencies right now, in other words, if I think that either I want to buy euro dollar or pound dollar, one thing that can help me decide is by looking at this. And so if the euro is weaker and the pound is stronger, then the pound is stronger than these two candidates, so I would want to pair the pound up with the dollar in this instance. Back here, when this was in an uptrend, we had the euro stronger than the pound, so the euro would come out as the stronger candidate. So if I wanted to be long one of the pairs against the dollar there, in this case, when it was headed this direction, I would have wanted to be long euro dollar versus being long pound dollar. So you can do this with a lot of currency crosses. This is just one of them. For instance, Aussie Kiwi. A lot of people wonder whether they should be long Aussie dollar or the New Zealand dollar. And you can look at the Aussie New Zealand pair and look and see how it's trending, and that'll help you to tell whether you should be long Aussie dollar or New Zealand dollar at that time. It gives you an edge in your trading. And then once you watch this stuff long enough, you'll find actually that you will find even greater benefit out of directly trading the crosses themselves, euro, pound, Aussie, Kiwi, etc. And it'll add a new dimension to your and even further diversification from your trading of the majors, because when you're trading euro dollar, pound dollar, Aussie dollar, etc., you're still trading dollar pairs, and so they're still all in that dollar basket. Or in other words, if the dollar goes up, guess what? It's probably going to go up against all of them and hurt all of those long positions across the board. And so you still aren't nearly as diversified as you think, even though you're have a few other currencies in there, because they're all based versus the dollar. And then when the dollar rallies, it takes every single one of those positions down. Whereas if you were trading Aussie Kiwi, euro pound, different ones like that, where you're taking the dollar totally out of the equation, it adds a new dimension to your currency investing. And so that's why I'd encourage you to look into the currency crosses and check out our currency cross service when you get a chance. I run that service, and I give exact buy and sell points, stop levels, things of that sort. I even suggest how much of your account that you might risk on a per trade basis. Really leave nothing to the imagination. So that's it for the chart of the day. Thanks so much for watching.